We only have about 10 minutes to do this very quickly before the non-farm payroll comes in, and I was supposed to be speaking from 1, but we have kind of delayed by a few things. So this is a big disclaimer, so if I say anything here and you get excited and go home and trade based on what I'm saying here, basically it's just saying that it's up to you. Okay, so if you've seen these presentations before, you're probably familiar with the way these kind of disclaimers go. Just to tell you a little bit about myself, I used to trade full-time on a prop desk. I used to work with various brokerages. I used to trade energy and gas and coal and oil for a physical procurement, for the delivery of that commodity rather than a cash settlement for a very long time. And then after a while I ended up in a prop desk trading US futures, working in London, and my parents still think that I do this. I moved from London to Ireland and about 10 years ago decided to trade my own money. I said I'll reduce my cost of living, and people that I met at that time, my new neighbors and friends, think that I am probably loaded. Really what they think it's this, that I'm a gambler. Actually they say he's the guy who does something with IT, because I have all these screens in front of me at night. And just to kind of clarify something, if you have 5 or 6 screens in front of you, that doesn't mean that you will make money 5 or 6 times faster. Okay? It means that you might lose it faster because you're staring at the screens. Really, society thinks that I'm doing something like this. I believe that I am doing something like this. I have this notion that I'm part of this kind of floor trading, dying breed. This is what I really do, and this is what I really do. So I'm going to cut all the slides and kind of go into a routine. Trading as business for me is that you really need to go to the bank as often as possible to deposit money rather than withdraw it and put it in your trading fund. So you really need to understand what type of trader or investor you are, what time frame do you trade in, what instrument do you trade in, and write down a written statement. So once you clarify all of that to yourself, then you're committing to that. So if you're trading S&P, if you're trading US equities, what are you doing placing a trade at 7:30 in the morning? The fact that you can, it doesn't mean that you should. It's liquid from 1:30 in the afternoon until 4:30 in the afternoon. It's liquid between 8 and 9 at night. So know exactly what you want to trade, and then decide what time frame you want to trade and what confirmation you need to trade. Okay? Now, risk and money management. If anybody didn't read the book called Reminiscences of the Stock Operator, please go and buy it now. Nothing to do with me. It's the best trading book you'll ever read. It's probably 100 years old. It's a story about the guy who lived and traded during the Depression times in the US. It's based on a real character. Nobody's writing this down. How many of you have heard about the book called Reminiscences of the Stock Operator? 1, 2, 3, 4, 5, 10. The rest of you go and buy it, please. This will be the best book you'll read, ever. You won't see a single chart. You won't see a single trading strategy. What this guy went through at that time, it's relevant now. Go and buy it. The other book that you should buy is Trading in a Zone by Mark Douglas. And then you should subscribe to TraderCast. Okay, now, so be realistic about the expectations. You'll very easily go to different events or go online and tell me, show me how to trade online and what is spread betting, and you go to the best and biggest marketeer and they'll sell you on the emotion a training course that's worth $2,000, but now for you today it's only 100 quid, and you can bring your friend with you as well for the weekend training course. And then you go on those training courses and then they upsell it for another 2.5 grand. Before you know, you spend 5-10 grand on your training education. Nothing wrong with that. Some of them are really good, okay? But then what most of the people do is they've spent all of their money on education, they go and knock on brokerage's door and say, I have 500 quid in my account, I would like to trade full time, and you want to make 50 grand at the end of the year. Guess what? Mathematically it's possible, but very unlikely. Be realistic about your expectations. So be realistic about your risk management. The other thing is, for trading fears, you'll be fighting this all the time. Leaving money on the table, missing out, being wrong, and losing money. One of them is dominant for you. And if I had the chance to spend 10 or 15 minutes with you, I'll tell you who you are, what type of trader you are, what time frame you should be trading in. What instruments are suitable for you? That's very easy. Go and buy a book. It's called Disc. It costs you £2. Read it. It's written 50 years ago. Okay? Nothing to do with trading, if you do with psychology. Absolutely nothing to do with trading. Okay? Now, decide the time frame that you want to trade in. So are you a day trader? So what is your prevailing trend? Are you working full time? If you're working full time, you cannot watch the charts during the day. Don't place the trade in 15-minute time frame and hope for the best. Your trend is identified by weekly and monthly. If you're trading in 4-hourly time frame, you can see your charts 4 times a day, 8 o'clock in the morning, 12 o'clock, 4 o'clock in the afternoon, 8 o'clock at night. You see your charts 4 times a day. You're 4-hourly trader. You're trading in swing. 2 minutes before the non-farm payroll. Let's kick it off. Now, this is your trend, weekly and daily. If you're trading in an hourly, 4-hourly and daily. Reason for that is you have 4 of these in one of these, you have 4 of these in one of these. That's your trend. Your trend is giving you a sentiment. And then you work everything on fundamentals and economic calendar and so on. Now, I'm going to save all the good bits that I was supposed to give you free of charge, and I'm going to shove it away because we don't have time for that. Kidding. Now, non-farm payroll, a big number, okay? So I'll be speaking to you with you guys to 1:45. So I've been given the chance to speak to you for a little bit longer. But now we have non-farm payroll coming in very soon. It's a big data point. Okay, how many of you have positions open right now? How many of you have positions open? Okay, intraday or end of day? Intraday positions open? No? Ooh, you're cool guys. So all of you are end of day. You all of you are kind of position holders. Good. Okay. Most of the people say they have position open right now in front of the non-farm payroll. They're front running the news. That's equal to financial suicide.
So which one?
The rule is, yeah.
So which one?
Now you sexy thing. This is euro dollar in the corner. This is euro dollar.
Where's the S&P?
This is S&P is tanking, and I like it. I've short Dow, and I'm heavy short Dow. I'm also short euro sterling, and this is not reaching my stop loss. I'll tell you about it in a minute. My stop loss is at 77.80. Sorry, this is DAX. DAX is tanking because euro is rallying, so they're inversely correlated. This here is gold. Gold is going through the roof. That means dollar is under pressure. We also have crude oil going sideways and dollar CAD tanking. They're correlated as well. This is dollar yen tanking. This is sterling dollar. This is Aussie dollar.
So the figure must be bad.
Well, I don't really know, so we can check it. So, assuming yesterday we got ADP numbers, which are usually a good indication of what we might get today. So, if we go to the economic calendar, okay, and see if we can get a reading somewhere. So, FX Street, yeah. Let's see, economic calendar, that's the easiest one to get, I suppose. This is really annoying. Yeah? Does anybody have the numbers? Today, what is the number?
38.
What is the number? I can't see it.
Oh, I see, yes.
No, but where's the number? Where's the actual number? It's 160,000 was expectations.
So we need the revisions.
38,000! Oh, you sexy thing, you! That's lovely.
What about the revisions?
That's really good. That's really good. Okay? Now, the expectations were for 160,000 jobs to be created in the past month. So, if more jobs are created than 160,000, that would likely increase the possibility of Federal Reserve increasing rates in June, maybe July time. Okay, so that's the logic. That's how market would proceed. Now, if number is really bad, then that means it's less likely that they will increase rates, but it's actually bearish for the economy. It's really bearish for the state of US economy. So they're not employing as much people, they're not creating as many jobs as they should. So now euro dollar is going through the roof, dollar yen is tanking, cable is reversing a bit. I don't like this. This is euro sterling, and I'll tell you about this trade in a minute. But I'm very happy with this. I'm very happy with this. S&P down and Dow Jones down as well. Now, this initial move down can be faded very quickly. So for somebody who's trading intraday, okay, they're looking at a 15-minute, an hourly time frame for the trend. And when that 15-minute initial move goes down, hits some previous resistance or support area, and then when markets open at 2:30, this can be faded and reversed very quickly. This can suck enough people to go short. And then they can reverse and say, the logic is only 38,000 jobs created, therefore less likelihood of the rate hike, therefore more easing, let's buy the market. Okay? So be careful. So the rule is when you're trading these big events like non-farm payroll is close everything well ahead of the number. If you are really experienced trader, if you're trading 20, 30 times per day, if you're sitting in front of your computer for 8 hours a day, then you have the luxury of closing everything 15 minutes before the number. If you're working or trading part-time, close everything well ahead. Wait for the market to react. Wait for markets to settle. Do not trade the news. News, in the past, we had good news and markets would rally. Okay? In the past, bad news and markets would sell off. Nowadays, we can have rally on the bad news. Markets are not behaving normally. So, wait for the market to settle, then read it in your chosen time frame, wait for confirmation, and then decide to engage with the market. 15 minutes later, half an hour later, an hour later, depending on how severe and important the news is. All okay with this? All useful?
Yeah.
Okay, cool. Now, so let's leave this. I am really happy with this. This is. I'm not happy with this. This is really annoying. Okay, this is really annoying for me. And I'll tell you why. This is euro sterling. Okay, now, so we had enough fun with this. Let's talk about something else. Now I'm going to be really salesy, and I'm going to show you something, and then I'm going to show you TraderCast, and hopefully this might make sense. Now, TraderCast is a membership-based portal. We are a fintech company designed by a trader and run by a trader. Okay, this is the monthly, quarterly and annual membership. So £40 a month, £95 a quarter, £320 per annum. Okay, and normally I wouldn't kind of promote any of this stuff anyway, because I'm the worst salesman. I love being engaged with traders, I love talking to traders, but I cannot sell. Okay, but I'll show you what TraderCast is, and if it makes sense to you, great.